it.
All right, we're going live. We're going live.
We
Pre-show,
could
pre-show.
legitimately do it, Yankee.
All right, well, you really think so? On this live
Yeah,
stream,
in
right
the
now.
next hour, we could do it.
We got 35 people in the chat right now, so I don't know.
It's
Hey,
not nothing.
hey, we're going live with the pre-show right now, calling everybody in. We'll be going formally live in about 5.5 minutes. So we were just talking about my channel and how many subscribers I have. I'm trying to reach that 75,000 subscriber milestone.
Wasn't that your goal for the end of the year? I
Yeah, it
mean,
really
it's
was.
only October.
I know. I'm hoping now to get
80, 90?
80, 90. Yeah, that would be really nice. 100,000 is the big one. You know what that's
Yeah,
like,
once
SD.
you get the plaque from YouTube and you get the little check mark next to your name in the
There
chat,
it is.
oh my! Once you get verified, you have
Yeah,
to be over
verified,
100,000
right.
to get verified. It feels nice.
I
It
don't,
feels nice.
I've got this 1 ounce gold coin that I'll be giving away to some lucky
Isn't
winner
that the
when I reach
pig?
it. It's
The
the
bacon
pig.
one?
Yes, I'm giving away the pig. You're
I
the
want the
pig.
bacon. Am I allowed to win the bacon? Is that
Boy, that's a really good question. Are
bringing home
you?
the bacon?
I think you are probably not eligible, man.
Are you serious? I was your first subscriber.
I
You're
know
gonna
that.
exclude your first subscriber
Dude, can
from
you
the
imagine?
giveaway?
Can you imagine the blowback if
I would just re-give it away. I wouldn't keep it. But okay,
man.
whatever, fine. I don't want to be in your giveaway then. But hey, I'll tell you what giveaway I do want to be in.
What?
That monster box giveaway over at SD Bullion.
Oh man, I hope everybody's entered that.
Yeah, that's
Oh.
pretty banging, especially with the premiums on Eagles.
Yeah,
I mean,
they said they're doing it first or second week in January. So you have until the end of the year, I think, to get in on that, but I wouldn't wait.
yeah,
Definitely need
you
to
might
do
as well
that.
get in
Yeah.
with your email now.
Right.
But this has been kind of a crazy week for silver, so I'm glad we're doing SilverPros. I don't have the exact numbers, but it's gone up 10 or 15%
Over
this
10%.
week.
Silver actually was leading gold, which was, I have to admit, it was a little bit of a surprise to me. We're going to have
Really?
Yeah, I really didn't think that was going to happen. It was one of the reasons why I was focusing a little bit more on gold, because I thought I was going to miss out. I'm glad I also got a bunch of silver, because that jumped.
Well, yeah, I feel like silver, a lot of the retail products are kind of starting to sell out a little bit here and there. And the premiums are like still fairly high, even though spot price went up.
I know.
So there's that, but also, the GSR did drop. I'm trying to think how many, like, I don't know, 4, 5, 6 points this week. So obviously silver crushed gold.
Absolutely. The GSR, I think, is now 83.
Oh my
I
gosh.
think it dropped to 82 at one point, or 81, or I think it got down there anyway. But yeah, we got to get down to the 60s though. That's where it needs to get to.
Yeah. Once it gets down to the 60s, then I'm gonna go a little more ham on gold. now I'm thinking about pigs. You talk about your pig coin, and now, oh man.
Yeah, we're going to have a great SilverPros tonight. We have a very special guest on, somebody we've had on once before earlier this year, James Anderson from SD Bullion. So he's going to, he's a Silver Pro, okay? He knows his stuff. He is an amazing, content creator. I don't know if people watch SD Bullion's channel on YouTube. You really need to subscribe to their YouTube channel. He did some recent videos that were just spot on awesome.
Yeah, especially if you like more in-depth and charts and just really good. He does more like technical analysis and stuff than I do. Like, I'm very surfacey with my videos. So if you want to sort of dive in deeper, you definitely got to check out James Anderson.
You know what else? I've been accused of being a little bit too U.S. centric in my channel. Oh yeah, absolutely. He is. His global knowledge is amazing when it comes to metals. He really understands what's happening, not just in the United States, but across. In fact, he doesn't even I don't think live in the United States. I think he's from parts unknown. So he definitely has a world perspective on things. He talks about what's going on, and we're going to talk about it tonight. I hope we're going to talk about what's happening with the Bank of England, what that means for silver. What Credit Suisse is going through. What does it all mean, right?
What does it all mean?
What
Yeah,
does
we're
it all
gonna
mean?
decode it tonight.
That's right.
But we're also gonna be hanging out with the chat, and we will do live Q&A tonight as well. So stick around for that. There's gonna be a giveaway at the end.
Speaking of which, I need to get that giveaway up. SD Bullion site. Let me see.
Yeah, we need to see what they're giving away.
I know. Uh-oh. It's a
Well, you
it's
got
a bar.
about 30 seconds.
I know. I'm trying to find the exact one though. Shoot.
Nadir, I believe.
Sorry?
I don't know. I think that's how you say it. Nadir?
Yes.
Yeah.
That's right. The silver. It's
it's like when you're driving and you see some roadkill. Oh, was that a possum? Nah, deer.
All right, we got 10 seconds. We got 10
Nah,
seconds
deer.
left. I got it. I found it. So we're good. All right, let's get ready to go. We are live. Welcome to SilverPros, everyone. Thank you so much for joining us tonight. So glad you guys are here. I'm here with my good friend and colleague, the one, the only Silver Dragons. What's up, bud?
What's up? Happy to be here. It's gonna be a fun show tonight.
Yeah, we got
really excited to talk about silver, and I'm excited to talk with James Anderson as well. We've only ever had him on once before, so
one time before, and it was. I mean, you don't need to pull stuff out of him. He is a wealth of knowledge and really can share it well. He's very articulate. You're gonna really enjoy this if it's the first time you've ever heard James. Man.
So should we talk about the flow?
Yeah. Why don't you shout out some people first, and I'll explain the flow. How's that?
Good call. Okay. Yeah. What up, chat? How y'all doing? Thanks for hanging out with us. Who do I see? Priscilla Rose, Jim Thompson. Hey, if you want a shout out, you better say hi in the chat.
That's right.
We got like over 200 people here. Snazzy Stacky. I have never heard that channel name, but that is awesome.
I like that name. Yeah.
I like that. Let's see. Mike 2K Drums, Dean, SB Mellow Stacker, Joe, Eduardo. How y'all doing? Thanks for being here. Chris, Richard, Judith, Nick, Lewis is here. What's up, Lewis?
Awesome.
Don Beeps in the house. Yeah, we got a lot of the regulars.
Yep, good regulars. 204. We can probably hit 300 or 400. Speaking of numbers, I'm getting kind of close to that 75,000 subscriber mark, SD. Do you know that?
Yeah, if there's anyone in the chat, I'm sure you are all probably subscribed to Yankee already. However, if you got multiple YouTube channels, you got to subscribe on your other channels as well. We can push him over 75K tonight. He needs 105 more subscribers, so we're really close.
Oh, man, I appreciate it. I also appreciate my members out there. I'm looking at Lewis. Looking at you, man. Your wife let me out. Oh, let me get away. All right. Well, that's awfully good. But Dan and Eduardo and Bob, BB's in here, Dom Beeps, Vote for Pedro. Great to see you. Priscilla, I just love my members. Really appreciate you being a part of the Yankee Militia. Check out, it should be a link floating around in the chat pretty soon. You can join if you want, become a Patriot Pistol member or the coveted Yankee Cannon member, and I get to talk with you one-on-one each month. So check it out when you get a chance.
I'm just looking in the chat. Yeah. Seymour Rivers says, I bought Eagles for $37 today.
What?
Wowzer.
Whoa.
Silver, and I'm assuming those aren't even like collectible, or you're probably just getting the Bullion version. Yeah, that's a premium.
We gotta remember to ask James about premiums. Yeah, let's not forget. I've talked to my local coin shop dealer. I've talked to SD Bullion. I've talked to a lot of people about when those premiums might start to ease up. But
that's almost 100% premium.
That's crazy, dude. Wow, you gotta love the Eagles.
Yeah, but I mean, turn it into a numismatic. I mean, especially with the low mintage numbers.
Yep.
I say low. They're still doing like almost $1 million a month.
I know, right?
The last 4 months,
speaking, right?
It's been under $1 million the last 4 months in a row.
Wow.
So clearly, they're not minting them to demand. Clearly, they're sandbagging. It's trash. But
right.
Okay, so we're doing a giveaway tonight. If you want to be part of the giveaway,
let me show them what it is.
Yeah, I pulled up Yankee. So this is sponsored by SD Bullion. They're the ones actually giving away this awesome bar, 1 ounce Nadir. Look at that.
Oh, yeah.
And if you want to just buy them too, you're not going to pay 37. I think they're what, 27?
27 for quantity 1. Yeah, this is a giveaway, so this is free for somebody.
Well, yeah. One person is going to win one tonight for free. But if you wanted to buy them, you can always check them out.
It's a lot cheaper than an Eagle. A lot cheaper than an Eagle. Yeah, these are assay too. They have their number on them and everything, so it's kind of a cool bar.
One thing I was thinking about with assay pieces, like if you are going to vault your silver, it already has like an individual number on it, so that's kind of cool.
Oh, interesting.
But also if you just keep track, like I guess if it got stolen, they probably would break it out of the assay, but maybe they wouldn't. Like if any of your silver gets stolen, I talked about this in a recent video, and they just go to a coin shop, they just sell it. It's not like when you go to a pawn shop and they take all your info down and the serial numbers and all that stuff. Like if someone steals your Eagles, they sell them for cash. No one ever checks up on it. But if you have a serial number, at least you have that. I mean, something to think about.
That's true. All right. So, yeah, we're going to do that at the end. We'll do a Q&A. And so we're going to hear an intro to bring on James Anderson in just a second. Please don't go anywhere. And don't worry about the chat. I mean, we're going to be dialoguing with James. You can listen in. After that's over, we'll definitely get to your questions. Sound good?
Yep, absolutely. Let's do it.
All right, let's bring James in. Actually, hold on. Let's do it this way.
Oh, yeah. So if you want to win the giveaway, we do it at the end of the show. So stick around for that. Yep. We usually go for about an hour, and we'll do the live Q&A, as Yankee said, after this portion. So.
Yep. Welcome to SilverPros, sponsored by SD Bullion. I'm your host, Yankee Stacking. I'm joined by my wonderful longtime co-host, Silver Dragons.
What's up? Happy to be here.
I'm glad you're here because it's a good one today. We welcome back James Anderson from SD Bullion to talk to us about silver. What's happened? What's in store for the white metal? James is the former managing director of goldsilver.com. Do you know what that is, SD?
I think wasn't that Mike Maloney's website?
Yeah, that's right. Yeah, but he now is in charge of the content marketing for SD Bullion. This guy is a wealth of precious metals knowledge, SD. So let's bring him in.
Let's do it. Here he comes.
How you doing, James?
Hey guys, thanks for having me on.
We're excited to have you. So why don't we just go right into it here and talk about what happened this past week, especially with the spot price of silver, and talk about some of the interesting news too. Bank of England, Credit Suisse. Take it away.
Well, obviously we've had a lot of dollar strength in the last year, especially the last 6 months, relatively versus other fiat currencies, right?
Right.
So when you look around, U.S. dollar performance in gold and silver has not been good thus far in 2022. It's been going down precipitously pretty much since a few months into the year. Basically, we were at 26 silver spot, and it floated all the way down to test below 18 very, very quickly in the last few weeks. But this Monday, obviously, we saw a reversal there. Dollar weakness relatively kind of looks like it's back in filling. And so we had a lot of, silver longs in the comics. So the spot price exploded on Monday. We saw a silver spot move 9% intraday up. That's one of the biggest moves in silver, historically on record. If you have to go all the way back to basically the fall of 2008 during the global financial crisis to find a move that big in one day. And that was back when, silver spot price was hovering around 9, below 10. And as soon as traders heard that they were going to do quantitative easing, you had a lot of people going long in silver, and spot price quickly moved up, and then by 2011 obviously ran from 9 all the way to 50 in a matter of 2.5 years. So 3 years, I suppose. But anyways, that's what we saw today. I'm not really convinced that we're off into the races until we pass 22 and you start seeing momentum traders piling in alongside. And you start seeing higher volumes trading going on in the COMEX. But right now, it's encouraging to see a week that we saw this week with silver leading and strengthening. You saw the gold silver ratio drop down to 81. It had looked like it was going to go to 100, and it reverted obviously pretty sharply in the last few weeks. So All encouraging signs, but there's still a little bit more time to go. But I think before the Federal Reserve changes its policy of raising interest rates, and before something likely breaks in the financial markets, which probably leads into our conversation about what happened in the Bank of England this past week.
Right. Right.
Yeah. So what are your thoughts on the Bank of England, them announcing basically they're starting up QE again, I guess?
Yeah, it's an argument about whether or not that's QE or not. I mean, basically, you had interest rates rising there and their currency was collapsing, and they were doing a whole bunch of policies lowering the amount of taxes that they were going to take and the amount of spending that they were doing. And so it was all weak for the pound. I mean, we were almost at the lowest low in terms of the pound versus the US dollar throughout the full fiat currency era. I mean, that's over 50 years time. We're almost at 1-to-1 parity now.
Wow.
And I mean, for a long time in the 80s, it was 2-to-1.
Yeah.
Okay. So it's a big the terms of, the UK pound being so weak. And so, so the Bank of England had to step in because allegedly pension funds were going to potentially default if they continued along that same path. And basically rates for gilts were running from, no percent negative interest rates to 4%. And they were headed towards 7 to 8%. And if they didn't step in and stop it, a lot of the pension funds that had trades on would have gone bankrupt. And so that's essentially what happened. And it's just an illustration of, we've had 5,000-year low interest rates for a decade now almost. And you had all these people put bets on, assuming that interest rates were going to stay low forever. And that's not the case anymore, obviously. They're still nowhere near where the true inflation rate is. So we still have real negative interest rates all over the world. But in terms of, what happened with the Bank of England, it's because there's all this leverage that's piled on with this idea that rates were never going up, and surprise, they're going up nominally, and things start to break. And so
the Bank of England actually forecasted a recession this quarter, Q4. I mean, central banks don't do that, do they, James?
No,
announce it?
Yeah, that's usually something that they deny until they finally have to admit there's a recession, until it's obvious to everyone. But for them to admit that there's a recession ahead of everyone else that was unprecedented. It's not normal.
And a lot of people are saying, well, yeah, that's England. That's not us. We're not going to do what they did. But aren't we just one crisis away from having an emergency session and dramatic action to stop what could be a whole host of issues across markets?
Yeah, so this past weekend, there was a big push online. You saw, especially on financial Twitter, people making a big stink about Credit Suisse and how the credit default swaps, the bets or the insurance for banks that are concerned about Credit Suisse failing as a bank. I mean, if you look at their stock market, their stock price in the last decade, it's just, it's gone from over $100, per share to now it's around $4, I think. And, it was in the high threes recently. So it just doesn't look good. And I think they had a lot of exposure to I think they had, I forget the name of the hedge fund that went down last year. It's Archipelago or something like that. Anyways, they had huge losses, billions and billions of losses. And when it comes to the banks, it's not just Credit Suisse. There's a whole bunch of European banks right now that have credit default swap bets or insurance filings that are going up, and they're going up to the rate that they haven't seen this many credit default swap rate climbs as we've seen in the last 10 years. And some of them are higher than they were in 2008. So you have people concerned about Credit Suisse, BNP, which is a big French commercial bank, Deutsche Bank, huge German commercial bank, UBS, which is another Swiss commercial bank.
Yeah, I think it's the C word, right? Contagion that they might be worried about.
Yeah, exactly. So if anybody knows about like all the derivatives that are on these books, derivatives, if one bank fails and you have the derivative on the other side, and basically you have winning derivative bets, you can come and if you look at the legal structure of these bets, they're first in line creditors, meaning if you're a bank that has derivatives, and you basically have bets that Credit Suisse is going to fail, it fails, and you can come along and you can pick up all the assets that are remaining, and you're first in line creditor. So you'll get it before any shareholders do, or even bondholders in a lot of these banks. So you're a secured creditor essentially with derivatives. And if you look at like the daisy chain of derivative bets between all the commercial banks, they're all intertwined. And so if one bank fails, it could lead to a cascade and a problem within the entire global commercial banking system. And so, I mean, there's the Financial Stability Board for the Bank of International Settlements does it every year. They literally have this thing called the GSIB report where they talk about which banks have the biggest risk to the global financial system. And GSIB means Global Systematic Important Bank. And so when you look at the names on there, BNP Paribas, Deutsche Bank, Credit Suisse, UBS, all of them are on there. JP Morgan is the biggest in terms of the amount of risk. If JP Morgan were to fail, how much risk it would imply to the entire global financial system. But
it reminds me of a thumbnail you had on one of your videos that said, be your own bank. I like to say that too, be the bank, right? And this makes me want to make sure I'm not overexposed to these types of banks.
Yeah, it basically, I remember being kind of shocked. If you guys know who John Authors is, he used to write for the Financial Times, and now he writes for Bloomberg, and he's been a longtime financial writer. He talked about during 2008 when he was writing for the Financial Times about the 2008 global financial crisis, and he knew the severity of the situation because he had to go at lunch to Citibank because he had over 100,000 in his bank account. At the time, that was what the FDIC insured. Now they moved it up to 250,000. But he went into the bank and saw other Wall Street people there. There was hundreds of people there, and he had to wait in line, and finally got in the room with one of the bankers and basically had to put the account in multiple names of people in his family, his children, et cetera, so he could get the FDIC coverage. But that type of stuff was happening before, there was headlines in Wall Street Journal about, the fact that Bear Stearns had already failed, but Lehman was about to fail. And so these people knew it, and they were all in the banks freaking out and covering themselves. And basically, he couldn't even report that in the Financial Times because they feared that it would just increase the runs on the banks.
They hide information. They don't want to cause panic.
Right.
Yeah. Suppress it. Wow.
Well, we were talking about banks. I would like to talk about our central bank, right? The Fed. So they've been jacking up rates, and the next meeting is in 26 days from today. And currently, there is a 66% chance, if we look at the CME Group FedWatch tool, to raise another 75 basis points, right? And so if they keep on jacking up rates, I mean, is this going to push silver's spot price down at all? That seems to have been the trend the last few rate hikes.
Yeah, if you have relative dollar strength continuing, I mean, the dollar is about as strong as it's been relatively versus other major fiat currencies. I mean, you have to go back over 10 years. It's a long time. I pulled the chart. It's at a height that it hasn't been at since early 2002, right? I mean, you have the U.S. dollar stronger than the euro. And if you remember when the euro first came out, it was the case back then. But for a long time in the 2000s, I mean, Europe was expensive to go visit. Luckily, I was recently in Europe on a little vacation, and it was pretty cheap. But that was not the case in the 2000s, especially around say 2008, 9. I mean, it was expensive to go to Europe. And so that's one nice thing. I mean, most of your listeners probably get paid in US dollars. And so it's one of those things where take advantage of the relative strength while it lasts. I mean, if spot prices are going to be kind of weak because of that, that's good. I mean, that means you get to buy more bullion for less currency. But ultimately, it all reverses. I mean, these are fiat currencies, and by design, they're going to all fail when it's all said and done. So if you look at the system, the way the financial system works, upside down pyramid, essentially, John Exeter had this pyramid that he drew up in the 60s, and it shows the fiat Federal Reserve note is the second to lowest level of strength when there's crisis in the financial system. And so we're in a situation right now where there is, a slow moving crisis in the financial system because of all these interest rates that are rising and the fact that there's probably shadow problems underneath the system that will be admitted only later when everyone is, when everyone's allowed to know what's going on. But I think ultimately where we're headed is probably another financial crisis. This is what's going to kick this off. And it may be 6 months from now. It takes a long time sometimes for the interest rates to push through the system and for people to finally admit that they're businesses are bankrupt. I mean, if you look at the amount of zombie companies in the United States, like 1 out of 5 roughly can't even meet the debt costs. You know, they're not only are they not profitable, they only are allowed to stick around because they could financialize themselves off such cheap debt for so long. But if interest rates are rising, good luck.
That's
So
it. It's changing.
Yeah, you're going to have a cascade of a lot of corporations that are going to either get swallowed up and bought out by the competition or go bankrupt.
Right. James, according to your Twitter poll, most people, actually most stackers, I think, probably, are bearish on silver. Why is that?
You know, I think it's just the relative recent price action. I mean, there's really not much to them. Think about it. I mean, you have inflation that's been in the double digits for a long time now, and silver's only going down in price in terms of spot. You know, obviously the U.S. dollar's been strengthening a lot, and the question is, well, when's the policy of the Federal Reserve going to switch and we're going to have dollar weakness? Because that's when big time bull markets happen with precious metals. I mean, when you have dollar weakness, gold and silver tend to do very, very well and consistently well. So I think it's just a question of people, you know, it always happens. People, the feeling, it gets exaggerated. So when it's bearish, it gets overly bearish. And when it gets bullish, sometimes it gets overly bullish and people start getting delusional. So it goes both ways. And I think we're just in a situation right now where it's been a little bit bearish of late, understandably so.
Yeah, I mean, it's not that surprising, you know, when silver was at like $28 an ounce, 8 months ago or something, and it went all the way down to 18 we saw last week. And so people were like, yeah, it's just going to keep going down. You know, you see these comments and all that, you know, but so I guess where do we go from here? Like, what's going to affect silver price the most? Is it just going to be, you know, when the Fed stops raising rates, when we get a pivot of sorts, you know, the dollar goes down? Is that going to be when we see silver shine?
So John Paulson, like a year and a half ago, was talking about his bet on gold as being something that he thought was pretty sure thing. And, you know, he's been wrong. He's basically, it's been handling a lot of losses last year and a half betting on gold. And they asked him recently in Bloomberg, and I think, you know, to surmise basically what he was saying is that you're going to have a situation where it's going to become obvious that the inflation, they can't stop. And the price inflation is going to continue, even though they're trying to raise rates. They would have to raise interest rates into double digits to stamp out this inflation. Mm-hmm. And it's not going to happen because something's going to break well before then. And his point is, well, what you're going to have is a reversal of the policy and then an understanding of broad-based in terms of big money that the price inflation is here to stay. And so you'll have a movement in capital markets from a lot of financial assets into commodities probably and then into precious metals, into energy, et cetera. So that'll just feed on itself in terms of, you know, those revaluing higher as it becomes more obvious that this price inflation is not something that the Federal Reserve can just stamp out by raising interest rates a few 70 basis points over time. And they're not going to be able to stop it. The explosion in M2 and the amount of currency in the system, that's going to lead to price inflation secularly for a long time.
Something you said too about in one of your videos about the COMEX, you said that the inventories are continuing to shrink. And I think you even pointed to India as being a big reason. Could you elaborate on that?
So India, thus far this year, has been on a pretty high pace in terms of how much silver they've been importing. It's been at a pace that's comparable to how much silver they imported in 2015. And one of the big reasons is because during the pandemic COVID lockdowns, 2020 and 2021, you just saw a very little amount of imports for silver and gold as well into India during those 2 years. Mm-hmm. And it was a combination of a few reasons, mainly the fact that wedding seasons were more or less banned. You really couldn't have big public weddings for those few years. And that's generally where dowries are handed out and why a lot of investment demand, or at least a lot of physical demand comes in for silver and gold because of the amount of jewelry that's bought during those festivals. And so this year, there's just been a huge catch up in terms of import demand for silver. I think if you look at India and the pace they're on, they may end up going over 300 million ounces in terms of the amount of demand this year in terms of physical. And I mean, that's a huge amount of silver for India alone. And then you look at the Western world and the amount of people still buying silver, especially with spot price going down recently. You have a lot of stackers who've been buying, in the United States and in Europe. So you have the combination of 1-2 punch in terms of the physical demand, and it's draining not just merely the COMEX, but it's also been draining the London warehouses. If you look at London, I believe they're down almost 250 million ounces since the silver squeeze began in Q1 2021. And I think a lot of that 250 million ounce disappearance that's happened recently is because of India's demand and the shortcomings elsewhere. They had to find the silver somewhere. It's probably coming out of London. And if you look at the amount of demand for India, their imports, about half of it comes from the United Kingdom. So my hunch is a lot of it's coming out of the London warehouses, and a lot of it's coming out of the unsecured ETFs like SLV, SIVR too. I was looking at that number today. I don't think people notice or realize yet, but SIVR, which was the second largest silver ETF before the silver squeeze began, and PSLV was third. That switched now. PSLV is much larger now than SIVR. SIVR shrunk by, I think 30, 40 million ounces. And a lot of it just in the past month, I think 20 million ounces got taken out of there. So I think what you have is a lot of this unsecured silver coming out of these ETFs and probably flowing off into stronger hands in the East, places like India. And SLV's down huge too. SLV is only, I think, 475 million ounces. And remember too, when it comes to SLV, A, nobody knows how much is truly held there. B, if you have a share in SLV, that doesn't mean anything. All you're getting is exposure to the SLV price. You actually own no silver. And so the amount of
unsecured is basically, I mean, I was going to ask you to clarify that for some people, just
yeah,
to make sure they understand.
Only people that can take physical metal out of SLV are the authorized participants, which are the banks, essentially. And so they're the ones who are able to pull metal out and use it for other means. But in terms of shareholders, they're all unsecured. So it's not. There are a few exceptions to that rule, like a Blackstone maybe could get exception, and JP Morgan could pull silver out for them perhaps. But overall, if you're just Johnny shareholder, even if you're a millionaire shareholder, it doesn't mean anything. You don't own any silver. You're just an unsecured shareholder. All you have is price exposure risks to the actual SLV, nothing more. And so if SLV failed, you'd have nothing. And ultimately, the amount of silver that's in SLV, a lot of it's double counted in terms of COMEX. There's a lot of silver that's part of SLV and London as well. So a lot of times when you look at these numbers, it seems like the COMEX is somewhat large and that the London warehouses are large, but most of the silver is spoken for. It's sitting for these trusts. And so it's not necessarily individual investors who own that stuff. It's double counted silver that's part of an ETF. So,
yeah, I mean, as stackers, we like to say if you can't hold it, you don't own it, right? And so when you're investing in SLV, it's just a number on the screen, right? There's no actual silver you're ever going to get out of it. But it's kind of interesting. Like you talked about the silver flowing out of the LBMA vaults and out of the COMEX. And I know it's been flowing out at a very fast rate, but they're not in any risk of like running out of silver in any time soon, right? I mean, unless they just don't have what they say they have in there, which I guess could be the case. But I mean, they're not going to dry up like next year, right?
The one big thing about SLV that always bothered me is, and it happened around Q1 2021 when the silver squeeze kicked off and there was a lot of excitement in the market. SLV changed their prospectus by basically saying, hey, look, if we can't procure silver, we can't procure silver. And that's now part of the prospectus. So it says basically, if you own our shares in our trust, that doesn't necessarily mean at any point in time we can go out and get silver. If there's too much demand in the market, we can't get silver. And so what you'll end up seeing, I think, eventually is SLV is going to bifurcate even further in time as time goes along. And the word's going to get out that it's smarter if you're going to have shares in an ETF and you're not so big that you can afford PSLV, you may be moving to that instead. Right. The only thing the big thing that SLV has is the fact that it can take on a lot more incoming amount of currency. But just like the prospectus says, that doesn't mean necessarily that they can buy the silver.
Exactly. I remember that change in their perspective is basically redemptions could be in cash, and that's that, right? So I do not invest in SLV.
Yeah. So
physical only.
Ultimately, it's a trust that, a lot of people hypothesize it was made and created to help divert a lot of capital flow that would have gone, into the physical market. And I think that's probably true. The other thing that SLV does offer is it offers options and a little bit more sophisticated investment options for people who are, retail traders, say, in the silver market. So I can understand someone who's got a physical, position in bullion outside the financial system, and also wants to lever up with options with SLV and do stuff like that. So that there is a case to be made for it, but it's only for short-term trading. I would never consider that like a risk-free silver bullion. It's the antithesis of that.
Excellent advice. Hey, James, would you entertain us with some predictions?
Oh, sure. What do you got?
All right, so let's just take the stock market right now. So we're down, I don't know, it's around 23% this year in the stock market, S&P 500. We've, I think, only been in this paper asset bear market for 8 months now. So, they're not even saying it's a recession yet, right? So my question to you, I know, is that crazy? Yeah, all right, 2 questions. When are they going to admit it's a recession?
Yeah.
And second, are we going to have a very long bear market in the stock market?
So I think the admittance of the recession probably happens by the end of the year, maybe Q1 next year, at least in terms of the formal admittance. But if you just go by the GDP and how it's gone the last few quarters, I think it's pretty obvious that we're already in a recession. But it may take a little bit longer for the financial media to admit that fact. And then the fact
after midterms, right?
I would say, yeah, yeah, exactly. And then the other thing is, the bear market that we're in it feels to me like we blew out the biggest stock market bubble of all time. And so that would just mean that the bear market is going to be a long one too. I mean, it took a long time to build that huge bubble that we built in the stock market. And I think there's reasons for it. I think that the financial powers that be wanted to build a huge stock market bubble to help out. Most of the baby boomers are long in the stock market still, and they wanted to make sure that those people had, a decent retirement. And I can understand doing that. And also they wanted to attract capital inflows from around the world to continue to make the United States the number 1 financial power in the world. And they did a good job of that. And so both of those things have helped the United States maintain a lot of power. And the dollar is another thing that we wield in terms of strength around the world financially. And so, I don't expect some major, crazy crash where the S&P 500 just goes straight down a wall. But I do expect a slow bear market that could go on for another 2 years.
Well, you said in one of your videos, I'm trying to remember which one it was, that you showed, I should say, that the bear market of 2000 lasted 31 months.
Yeah. Right. Yeah. And it was, and it's just like when you look at the chart, it's just a slow U, like an upside down slow U that just bled people out. And, if you remember back then, 2003, 4, 5, stock market was terrible, and everybody went into housing, and we blew up a housing bubble essentially. And so, so
thanks for that prediction, though. You think it could be a protracted bear market, possibly?
Yeah, I mean, look, all you do when I look at these things, I look more of a long-term basis, really, and I look at like the S&P 500 versus gold, or the S&P 500 versus silver. And if you look at those charts, like on a long term, you can tell that the all-time bubble in terms of silver and gold, it was a 2000 stock market bubble. But we had a huge bubble recently in the stock market, and that when you look at it in terms of silver and gold, it's basically a dead cat bounce on the chart. But it was a dead cat bounce that made a lot of stock bulls very rich, very wealthy. So kudos to those guys who did well in the stock market in the last 5, 6, 7 years. But things that come up must go down eventually, and we've been so far and levitated in terms of the prices and how expensive some of these stocks got and how delusional the valuations have gotten. It just, to me, it seems like we're going to have a bear market that's going to last for a long time, and it's going to take some time to get back toward reality.
Yeah, I definitely agree with that. If we could get one more prediction or your thoughts on silver. So where's it heading for the end of the year, and then where's it going to go next year?
So for silver, it depends really about the Federal Reserve's policy and what happens in terms of how much more they can hike rates and how much more dollar strength we could see. You could make a case for silver to go even lower than it's gone even thus far in the year. You can make a case where it goes below 18. You could also make a case where silver goes beyond 24 and up toward 26 by the end of the year. So that range it's not extremely helpful. I know. To me, it's when it comes to silver, this the best years are coming. I think 2023, 2024, you'll start to see silver move and eventually get beyond 30, and that's when the real excitement will kick off. But we have to get through probably this policy change in the Federal Reserve, and then whatever craziness comes out of all these interest rate hikes, because I don't think the Bank of England, I think that's just a little bit of a foreshadowing of what's coming, and it'll be big.
Also one last thing too on price of silver. If we get above 30, or when we get above 30, will we see some, easing up on the premiums?
Yeah, I would think so. I mean, I recently sold Silver Eagles to buy 100-ounce bars because I just thought, kilo bars, I'm sorry. And the reason being is that the arbitrage was just too good. Like, you could basically take 500 ounces of silver and turn it into 700 ounces of generic silver, right? And so you're basically increasing your ounces by 40%. And if you have a counterparty that's not, it's not riskless. You have to wait about a month or so to get the metal because there's so much demand and there's so much back ordering. But if you have a counterparty that you trust, people could do that. And so I didn't sell all my Silver Eagles. I kept a lot of Silver Eagles because I think, as crazy as it's been, at this moment with premiums, it can get crazier in the future. And so I do think that between here and the craziest time that we'll ever see for Silver Eagle premiums is there should be some quickening up and some catching up, especially if spot rises. When you get spot beyond 30 to 40, say, it would be very, very hard for me to say that spot's 40 and you're going to be paying $60 for a Silver Eagle. I can't imagine that being the case. He's probably in the low 50s still.
Yeah, we'll have to wait and see what happens with premiums. I mean, if they're not going to be minting very many Silver Eagles, we could see 100% premium, 150. I mean, who knows how high it could really go? But
and that's exactly why I kept a lot, because I mean, this is nothing to where we've seen nothing yet. This bull market could get really, as bad as it's been in terms of bullion since 2011. It's been one of the worst investments of all time. And let's be honest, it's performed really poorly last 10 years roughly versus a lot of other asset classes. As bad as it's been, it's as crazy as good as it could get, on the other side.
Yeah, it's a good time to back up the truck, right, Yankee?
Oh, absolutely. I bought quite a bit. Hey, James, thanks so much for joining us. I really do appreciate the time.
Sure.
Great. And with that, we are going to open
live
it up.
Q&A.
Yeah, this is Q&A time. So everybody, we got 519 people in here.
Real quick.
Okay,
Yankee.
go.
I shouted you out on my channel. If there's anyone here who is new to Yankee stacking, please subscribe to his channel. We've got him now within 100 subscribers of getting to 75,000. He needs less than 100 people to hit that subscribe button. I know there's some of you out there who it would be so cool if we could do it live tonight in the next 20 minutes. If you have a backup YouTube channel, subscribe to Yankee. Okay, that's
Thank
it.
you. And I'm just going to say right now, too, Ray Barr is threatening me.
Whoever's the 75,000 subscriber of Yankees.
It better not be Ray. That's all I can say.
Yeah. Maybe you'll get a free sticker or something.
Right. No, that's a great idea. Where are my Yankee stickers? Here we go. Yeah, you're 75,000.
But we got to get to the live Q&A.
Yeah, let's do that.
We're really thankful to have James here. So if you have any questions for James or any questions at all, I got one here from Seymour. Why is platinum holding up so well? What do you think? Well, platinum, I mean, it's not doing that great. I mean, over the last few years, but
yeah. I mean,
what are your thoughts?
Platinum, it's still super cheap versus gold, and like a long-term chart. You can go back to I have a chart that goes back to 1900, and there's been only recently it's been as cheap versus gold as it's been in the last 120 years. And the question is, what's the future case for platinum? And a lot of times it's about the hydrogen economy and the fact that China wants to build a lot of capacity for hydrogen energy and hydrogen cars and stuff like that. And platinum is used a lot in that. But if you look at platinum just in general, elementally, and the way it acts, it's a real stable metal, and it's really hard to melt. For a long time, human beings, we didn't understand how to get fire hot enough so we could melt platinum. And so, for instance, when the Spanish conquistadors came over to this side of the world and were coming for gold and silver, platinum was a nuisance. They considered it a real nuisance when they were mining for gold and silver. And sometimes they would use it to counterfeit gold coin. But it wasn't until around 1900 or so that roughly the Industrial Revolution where we were able to get fires hot enough and learn enough about platinum. And now platinum it's a strategic metal. It's super important for military applications, and for airplanes and airplane engines and stuff like that. So to me, it's like an extraterrestrial metal. And I think that we're still cavemen in terms of understanding its applications. I think there's a lot of applications for precious metals that we're going to learn in the next 50, 100 years. And it's going to become even more important to have them. And
but
so,
it's never been a monetary metal, and you doubt that it would probably ever.
Not here, anyway.
Not here.
No.
Thank you, in the United States. Yeah.
But I mean, silver and gold aren't necessarily monetary metals. We're not walking around spending them. We're using them to store value. Right?
Not yet.
Right. But more so for stores of value, really. And if you have a situation where the currency is not storing the value well, precious metals should. And so a big event like that, platinum would probably be a safe place to hide. And if you look back at 1980, in January 21st, I think is when gold and silver spiked, and silver hit 50 and gold hit 850. But it's only a couple months later that platinum and palladium blew out and had record nominal highs as well. And so ultimately, before this bear market plays itself out, I expect all four, silver, gold, platinum, palladium, all to hit new nominal price highs, and especially in fiat dollar terms or in any other fiat currency term, you'll have them all spike to new nominal highs before it's all said and done, probably within a year.
All right, let's see if we can get some more questions fired off real quick to you. Clean money. Black Friday deals from SD Bullion? Black Friday?
Oh, there will be. I'm not in charge of setting all that stuff up, but you can bet. It'll be big, and it'll be multifaceted.
Not only that, I will say that I have a huge SD Bullion Black Friday giveaway coming up next week. It's going to blow your mind, so you're not going to want to miss it, Clean Money and everyone else there.
Hey, we got a question here from Lori. What's your cat's name?
No, this is Napoleon.
Napoleon?
Yeah, Napoleon. He let's see. I'm trying to remember. He basically is, how old is he? 7 years old now? He's a little lap kitty. He likes to sit and warm up in people's laps.
Here's one from Eric Bauer that I actually don't know, but I can infer that it's probably the answer is no. But are all buffalo head rounds made in the USA? I know it's just a generic round, but like the mints that make them.
Yeah, I would say the vast majority, like 90%. I'm not even sure there's even an offshore mint that makes them outside of the United States. That's a pretty U.S. specific type of design. So the buffalo head and the Morgan heads, those are typically all privately struck, rounds in the United States by various mints.
Lewis asks, and I think you kind of touched on this a little bit earlier, what type of silver does James like? Junk, generic, or sovereign? So
back when premiums were more reasonable, like in the 2010s, especially 2017, 18, that was about as low as premiums ever got. I would buy Silver Eagles if, there was times where Silver Eagles were $2.29 over spot. So spot might have been 17. You're paying 19 and 29 for a Silver Eagle. To me, that was worth it because, I lived through the 2008 financial crisis. I saw the premiums explode like they are now again in Silver Eagles. And so I knew someday, to me, I was confident that would happen again, and it has. So I would buy Silver Eagles whenever premiums were reasonably low, and I'd buy sovereign silver coins. I mean, there was a time, I think, when we did Royal Mint push at SD Bullion where the price over spot for Royal Mint coins and tubes was like $1.10, $1.05 over spot. I mean, that's a ridiculously low price over spot for a sovereign silver coin. And so when the premiums are reasonable, I'd like to get sovereign silver coins. When they're too gapped out, I usually will just go with bars or generic rounds. 90% silver is fine too, but the premiums have exploded on those, and they're back toward their 2008 highs again. If you look at like a chart of silver, 90% silver or Silver Eagle premiums, it's just a huge U. The U being the connection between 2008 and now. And I don't like to pay for premiums that high, so I will wait until they get back to reasonable areas before I would buy either of them again. But 90% is cool because they're not making any more of it. And, it reminded me to look. I looked again, 2018, at the end of 2018, we were hearing from refiners of silver that a lot of 90% silver was getting sold at melt at spot price. I mean, there was nowhere to move this stuff. There was no interest in buying it at the moment. We had some sales at SD Bullion 90% at spot. I mean, that's how crazy.
That's good deals, yeah.
Right. I mean, it went absolutely reverse in a matter of a few years, and now it's 40-50% over melt. And so the nice thing about 90% is they're not making any more. And so it's cool to have some of that because it's just our heritage as a United States citizen. And so owning some of that always is going to make sense to me because it's just this trustworthy, sound money that are, Constitution prescribed. And so having that makes sense to me.
Okay, we have a lot more questions. This one I want to get your take on real quick. Can you explain why different bullion dealers have a slightly different spot price? I covered this in a recent video, and actually some of them use the bid and some use the ask, which is really weird. But it seems like a lot of what is it called? When you're building your website, the service you're buying from, those can differ slightly,
the
right?
API that they use?
Yeah.
API. Right. So it depends on the feed that you use, and then whether or not you use the ask or the bid, or you might use a hybrid between the two. So it just depends on who you use, and then the choices you make in terms of infusing into your website.
Yep. All right.
Tim asks, and this is a good one, is FDIC real or fake? In a bank collapse, will we lose our money? And I don't think Tim's saying, does it not exist? But is it sustainable? If we had a crisis or a collapse, I should say, would the FDIC be able to bail everyone out? And what would that do? What would the Fed have to do with the monetary supply?
So the FDIC, I think they carry enough to cover, if you look at their books, it maybe covers about less than 1% of the entire amount that's sitting in checking and savings accounts. And so you have to think in terms of, well, how many banks would fail? During 2008, there was a lot of banks that failed. And there's a lot of people who still got their money because some other bank probably gobbled them up. And the FDIC did have people's backs in terms of, nobody lost as long as they didn't have over 250,000, or maybe at the time it was 100,000. Mm-hmm. So I think the point would be, know the bank that you're with. I would suggest don't bank with banks that have huge amounts of derivatives on their books. So I would shy away from commercial banks like JP Morgan and Citibank, places like that. I would stick more so with local banks that have, do a little bit of research and try and figure out which ones have sound balance sheets, ones that aren't highly leveraged. And in a crisis, they'll probably be fine. It's the companies that are leveraged super big and they have derivatives and stuff that you don't even know what's on their balance sheet because of all the trickery that's gone on with accounting since 2008. Basically, they threw out all the rules for accounting, and they just mark to model is now still the operation where they just, oh yeah, this thing over here is worth this. They just take our word for it. That's basically how they do the accounting on a lot of these commercial banks. So nobody really knows how solvent they really are. So my suggestion is just know the counterparty that you're with and don't have more than 250,000 per account with any bank.
Awesome. Here's a question from Russ, which I'm actually kind of curious on this one. So he says, I have a buddy, got into stacking. He's a doom and gloomer. He's spent over $10,000 of his inheritance in the past 4 months. How can I throttle him back, or should I just stay out of it? He's
stay
all
out
in.
Of it.
If a grown adult wants to make their own, decision about finances or whatever, I don't know.
Yeah, I've made articles on SD Bullion about prudent bullion positions and using back tests for the last 50 years and how they performed. I think CPM Group did a good study on that, and what they did was a test from 1968 to now 2018. I think was the year that the model went. So it was like a 52-year back test, and they were doing a test against S&P 500 bonds and US IOUs basically, and bullion. And the number they came up with was the best risk reward ratio of the last 50 plus years for bullion was 25% gold. And that was it. Gold in the last 52 years was the one that outperformed all the other major precious metals. And if you look at a chart, that's the truth. So, a lot of times people will say, 10% gold, but the 10% gold thing goes back to like the mantra that was said in the late 1970s. And now gold as cheap as it is versus financial assets, I think you could be a little more aggressive, with your liquid net worth and have maybe 20-25% of your liquid net worth in bullion. But if you go beyond that, you have to make your own choices. It's obviously your decision, but you have to kind of look at where we are historically and also have like a time horizon that is reasonable. This is, you're shorting by owning bullion. You're essentially shorting the US dollar and all of other fiat currencies, and you're shorting major power in financial world. And the question is, how long is that going to take for that to play out in terms of a bet? It could take decades. So there's been many bullion bulls that have come and gone that have been waiting forever for this to actually happen, and they didn't last.
In a lot of ways, there are other investment asset classes that might make more sense than a non-yielding, bullion stack. But
diversify, right?
I'm stacking I'm a prepper stacker, so there's a reason I have this. It's more of an insurance. It's wealth insurance. Hey, I got a question from, I think, a 12-year-old. I got to ask it. Ren Stock says Yankee, but I'm going to ask James this. What's the cheapest silver to stack as a 12-year-old? By the way, it's
probably got to go into
your
your coin shop, I imagine. I mean, it's hard to buy online when you're 12.
I know. That's a very good point. Unless you get it through mom or dad, right?
The cheapest at my local coin shop is the 40% silver Kennedy's.
Yep.
I've seen that a lot.
Yep.
Yeah, I don't really like those because when you go to sell those, you get terrible offers.
I agree with you.
It's like 80% spot.
Yeah, my suggestion would be try and find 3/9 fine silver. So find silver rounds. A lot of times if you go into silver coin shops, they'll have like a box of silver rounds, just random ones. And they're kind of cool because you can go through them and look at the designs and cherry pick the ones you really like. But in the end, 3/9 fine silver in round form or small bar form is probably the best bet for someone who's a small stacker.
I have to plug ST on this one too, guys. I absolutely love this 10th anniversary round of theirs. It's such a great price too. SD Bullion, you guys did a phenomenal job on these silver rounds. What else?
Smokehouse. We got one question here about copper. What do you think about copper bullion? Should we be stacking that? James, we did talk about this actually in our last SilverPros. I mean, it's a lot of weight, if you want to have any sort of a dent. But do you think people should diversify into copper?
No, I don't. I mean, it's cool. It's cool for like a collecting thing. If you enjoy the way that they look and the designs on them and stuff like that, that's fine. But if you actually net out what it's worth in terms of melt value versus what you're paying, it's way too expensive. If you really are a copper bull, then go around and find pre-1982 copper pennies. A lot of people have done that. I mean, if you look at the melt value of a pre-1982 copper penny, I think it's over 2 cents still. I'd have to look, but the melt value of it's twice what its face value is. But the problem is that a lot of people know that, and they've already run around and taken all the pre-1982 pennies out of the.
You could still find them in the boxes.
Okay,
I still find them.
So their melt is 2.3 cents per. So if you feel like your time is worth it to go try and chase around the world looking for pre-1982 cents for copper, that's your best bet if you're going to do anything in physical copper, because that's a lot, I think, smarter than buying these copper rounds that are overpriced.
Yeah, easily you just double your money right away. Real quick, we're over 600 people in the live chat.
Woo,
which
is awesome.
Got to be maybe close to a record.
I think it's a SilverPros record. Yep, I think we broke our record.
So we appreciate all you being here. If you're not subscribed to Yankee Stacking, just hit that subscribe button. Then you'll be able to be in the live chat. You can ask us questions. But he's so close. How many more do you need, Yankee?
Oh man, I gotta
he's
check.
So close to 75,000 subscribers. I was really hoping we could do it tonight. He only needed 105 more subscribers when we started the stream.
I need 75 more.
Oh my gosh.
I know. It's okay. It would make my day okay though if I got that one. Wow, what a milestone. We also have a giveaway coming up. And you also need to be a subscriber to have a shot at the SD, right?
To type into the chat, you have to be a subscriber. So
I know.
If you want to enter the giveaway, free silver, we're giving away here in like 2-3 minutes.
Specifically, this bar from SD Bullion, the Nadir bar, I believe it's pronounced. I hope I'm saying that right. Let me bring it up a little bigger. Ooh, look at that.
Nadir. It looks nice.
Yeah, that'll be a fun giveaway. But I think, oh man, do we have any last thoughts or questions? Walter Alford, what's your thoughts on toned silver? Real quick, James, you like toned or not?
Yeah, any type of aged silver, it's cool. I mean, a lot of people don't like it on, say, for instance, their milk spot on like a Royal Canadian Mint old silver coin, or they don't like to see toning on maybe their Silver Eagles. But bullion is bullion. That's first and foremost. It's 3/9 fine silver, and so toning on that stuff doesn't bother me at all. And the other thing is toning on like collector coins is sometimes good. I mean, it can increase the value. So it's not a big deal. And in bullion too, if you want there's things you can do sometimes to get a little bit of the toning off. If you want to clean them a little bit, you can do that too.
As long as it's not semi-numismatic, you gotta be careful there.
You wouldn't clean that.
Yeah.
Just showing us some milky on that
Krug. Milk and tone and all that kind of stuff. You're showing the bling. All right. I saw Talking Bullion. He was telling me, dude, you got to get the dime guardhouse box done. Now that I got the half dollar, I got the quarter just done. I got to do the dimes. I'll get that done, TB.
Look at all these people gifted membership. That's awesome.
Oh, that's awesome.
Thanks for the support, everyone.
Thank you
Hey,
so
if you want to
much.
enter the giveaway, you got to type something in the chat. Say hello.
Now's
say
your
I'm
chance.
here.
You just
type in
you
the word silver.
You don't have to put SD Bullion in the chat. SD Bullion. That's your word. All right.
Type anything into the chat, and that'll be the way we can capture your name and enter you into the giveaway for the free silver. Thanks for hanging out with us.
Yes. Thanks a lot. Again, James, this has been great. Thank you. We're going to do the wheel of names in just a couple minutes.
Yeah.
While we're waiting, what geopolitical crisis are you thinking could really make a big difference in the price of gold and silver? Praying that doesn't happen. But what are you watching right now? Where is the hot points?
I think Europe is the big hot point this winter, just given the energy issues that are happening. I mean, Germany's a scary situation in terms of it's an industrial powerhouse that's having real issues with their energy. And so I look at the banks in Europe and I worry about some of those banks perhaps failing and that setting off a global problem, systematic problem with the banking system globally. And so I think that right now is the biggest risk that's kind of hovering out there in the next 6 months or so.
All right, I'm going to harvest the names right now, guys.
Will mining stocks survive the coming fiat crash? There's another question in there.
I'm not a huge mining stock gambler. I had a mining stock in Russia that got nationalized when they went in Ukraine. So that was my lesson to remind myself to stick with bullion because to me, it's the most asymmetric bet in terms of the lowest downside risk versus, a good payoff if things play out the way I think.
Did you have a large exposure there?
No, it was like 12 grand. I mean, it wasn't.
All right.
It's nothing crazy.
Yeah, you gotta keep the percent of your wealth down if you're going to be speculating there. My opinion.
Yeah.
You don't want to do much. All right, so I'm going to switch over to the wheel of names. We're going to punch in these names.
Here we go. And you get a free sticker too.
Oh yeah, absolutely. The free sticker is why you do it, right?
Couldn't get Yankee over 75,000 subscribers though.
Man, you told me that was going to happen, bro.
We were so close. We got how many did we get you? 30 or 40 already?
That was nice. That was really cool.
Nice little bump.
All right. We'll get there in a couple days. All right. So let's shuffle these up really well. Good luck, everyone.
Is this a rigged wheel here, Yankee?
No,
or is this legit?
It is until I shuffle it one more time. There.
Oh, now it's
not.
Now look at all those empty spots. That's not rigged at all. Look at that member 2 years.
Oh, come on, man. I'm not going to go through and clean all that up. Not yet. No. If it lands on that, I'll just spin it again.
See, we only have like 400 and something entries, so I know a lot of these people aren't subscribed.
See, I know.
That's what I'm saying. I literally went on my backup channel tonight and subscribed to you, Yankee.
I don't understand why all the spaces are there, I have to admit. That is weird. That's not ever happened to me before. I've not seen this before.
If it ends up on an empty space, we
this
respin.
Is ridiculous.
How many times are we going to have to spin
I don't know if it's a display. Listen, we broke over
maybe
600.
It'll put a name up.
Yeah, let's see if the
maybe
name
it'll put a
shows
name up. Maybe there is a name
Come
there.
on. It's because we got so many people. What's going on here? All right, so let's sort this first to see if there's any spaces in here. Whoops.
No winner. Sorry,
No winner.
Brian. You were so close.
That's it. Okay, all right, fine. Maybe it's the member links in here. Hold on.
It legitimately was rigged.
That's all I need. I don't even want to look at the chat right now. Raybar is probably just going absolutely bonkers.
Look at that. Look at that.
I don't want to look. I'm not going to look. All right, so get rid of some of these things here. I don't understand that.
Look at all that new member. It's because someone gifted a bunch of members during the stream.
What is going on? All right.
No, that's good. That's good.
No. Hold on. The wheel of names is having a little problem here.
Look at that. Raybar says exposed. Yankee stacking.
I have never seen. Okay, so that looks right. Okay. Here we go. All right, let's just spin it quickly.
Now that it's unrigged.
Now that I've unrigged it. I've
my
never
goodness.
seen blanks like that before. That is weird. I saw my name go by. Oh.
It would have been someone's name on that blank spot that lost.
All right, so somebody's going to be happy here, though, and everybody else is going to say it's rigged. Priscilla
It's
Rose,
rigged until
Ren
you win.
Stocks. Oh, there goes the 12-year-old Matt Allen.
It's rigged until you win.
Yeah, right. Oh, can Empress hold on?
Knox.
Oh, no.
Knox.
Yeah. Yep.
All right.
Knox
Congratulations.
Stacks. You did. You won it, Knox. Don't forget to email me your mailing address at yankeestacking@gmail.com, and I'll get that out to you. All right, James.
It's a hard knocks life.
Yeah. James, I think that's about it. Thanks so much.
All right, guys. Thanks for having me.
All right. Take care.
Thanks for being here. Are we going to end this, Yankee?
I think we better.
Right? All right. Thanks, everyone, so much for watching, and we will see you next time on SilverPros.
Say that again. Thank everybody for being here. I know. It's
hold
tough.
on. Let me
I'm getting old, bro. I'm getting old.
Okay, hold on. I'll do it again.
All right.
Ready?
Yeah, I'm ready.
Okay. Thank you so much for watching, and we will see you next time on SilverPros.
Stack like a pro.
Have a good night, everyone.
Good night.